Trying to think of a catchy intro.
Okay.
But I don't have a catchy intro.
All right.
Maybe this is the catchy intro.
This is the catchy intro?
This is the catchy intro. How's everybody doing? Hope you are doing well. My name is Andrew Kuhn, Focus Compounding, sitting next to Geoff Gannon in our hotel room in Ohio. Jeff, how's it going today?
It's going very well, Andrew. How's it going with you?
It's going great. I hope it's going great for everybody else as well. July 4th is coming up, and we'll be working. We'll be together on July 4th. What are we going to do? How are we going to celebrate July 4th? What's the most American thing we can do?
Well, we'll probably be somewhere so you can buy fireworks.
Should we just go buy a bunch of fireworks and blow them up? They're on the road. We've seen a lot of places, firework tents in parking lots and everything like that.
We drive through some pretty rural places and stuff with where we go because we sometimes are going to out of the way places and we drive. So we see some things that you wouldn't normally see.
And you didn't, what are fireworks like in New Jersey?
Fireworks are not allowed in New Jersey, so you have to go over to Pennsylvania to get them.
Yeah, that's what I told Jeff. They just take away all the fun, apparently.
No, commercials always would say things about anything that would have, cap things and whatever explosive things would be like, blah, 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 not available in New Jersey.
That is fun. So we are going to be together. So maybe we should do that. We're going to be in an area where probably fireworks are going to be everywhere, I'm sure. So it'll be fun.
Yeah.
It'll be fun. We hope everyone's having a great day. Excited for July 4th. I don't really know. I don't even know what
half our audience doesn't celebrate July 4th because they're not Americans.
That is true. But don't really know where I'm going with that. But anyways, in today's podcast, if you like what we are doing here, make sure to hit that subscribe button, both on YouTube and the podcast side of things. This is the last week. Well, actually, I don't know what day it is or when we'll be behind
We know what day it is. We don't know when you're hearing this.
Yeah, I don't know when you're hearing this. So if this is before July 1st and you like our backlog, make sure you save it. We're going to come up with different content, probably more behind the scenes type of stuff, more tailored to them. Yeah. Focus Compounding, the website will always be like research, stock
Focus Compounding. So we should explain that. Focus Compounding, the website, just stock research. I write particular specific stocks. It's nothing to do with us and anything about our general investing thoughts or anything. It's just me doing write-ups, okay? And then, so you write up a Big Apple Bagel or Dover Motorsports, whatever, that's the kind of thing you'll see. And then Focus Compounding premium thing, whatever that is, behind the scenes stuff and all that. But also you'll get a Focus Compounding daily email for, whatever you want to call that. Not email. There'll be a post up there. Yeah. Eventually there'll be a page that
members... we're thinking of different ways. Maybe we could do like a vlog for everybody or something like that. Yeah. Just different types of content. I think the way I envision it, almost like if we had like a Facebook page, but it's not going to be through Facebook. We
vetoed that idea.
Yes, we did. Where we could continuously upload, stuff and just really interact with people. So Focus Compounding will be stock write-up specific. And then for people that sign up on the premium of the podcast, it's going to be about $8 a month. You'll be able to get access to the backlog, over 200 episodes. And then we're going to just have different, more personal type of content, whatever that is.
Yeah,
but
and
still educational, fun.
The investing stuff that I write up. Yeah, for the not specific stocks, but the general investing stuff. Yeah, like answering questions, that kind of stuff.
Yeah. So in today's podcast, it's titled "Do as We Say or Do as We Do." Times when we've broken our own rules, and it's interesting because people talk about Buffett. They say, "Don't listen to what he says, watch what he does."
Okay.
And how sometimes his public comments maybe would be a lot different if, they're private, which is pretty much like everybody. But they just say, don't watch what he says, or don't listen to what he says, watch what he does, right? So when he's talking about, America, a lot of people, criticize him because of his cash hoard and everything like that, a lot of people are probably looking to see what he's going to do with that. But anyways, so let's talk about times that we've broken our rules.
Okay.
The rule on the rule list should always be know when to break the rules. I think that's the most important rule.
Right. The rules are guidelines.
Exactly.
Guidelines, not rules.
That's right. Yeah, so we have guidelines.
Like guidelines, yeah.
We have, sort of these filters that we go through, this process that we stick to.
And there's also maybe I say things to people on the podcast like more, or in emails, more like definitively, don't do that. Just because the outcome could be so bad, and yet I'll do it. Mm-hmm. And so we could talk about those too.
Let's do it.
All right. So some of those have to do with frauds. So one thing I hope we don't have a lot of listeners in Nevada, but
we are banned from Nevada.
I've said many times to be a little careful about companies that incorporate in Nevada. I've also said be careful about companies in China. And when I say that, I mean things like Chinese reverse mergers into the U.S. I mean things about companies that may have switched their incorporation to Nevada for reasons that, like having to do with protections in cases of fraud or whatever, things like that. So obviously don't mean a company that is from Nevada. and we'll invest in companies there, right? Companies incorporated there, even though they're in completely different states. But in those cases, we did additional research about the people involved and about the company and its history, and did things to kind of get comfortable with it. And you could do the same thing. So you could absolutely break this rule of any rule that kind of is a red flag, whether it's an auditor that I'd be worried about or a state of incorporation or whatever, if you then go on and do the research to establish for yourself that these are honest people involved and things like that. And then sometimes we find the reverse. Of course, I'm not going to publicly talk about those things. I like the Buffett rule of don't criticize as a group, not individually, right? You praise individually and don't criticize individuals. So we won't mention ones of that. But sometimes, you were reading a presentation not that long ago that I had sent you from something, a very, very old presentation, has nothing to do with the company today. And you were like, oh my God, this is what it looks like. Like, this is what it looks like when people really fall for a fraud. Like, this is what a fraud presentation looks like. It's nothing like a real company, and it's like, this is insane, right? And so sometimes you come across that.
The way I'm like, these adjectives they're using to describe this is like incredible as well. Yeah, just it's very not like written by lawyers for lawyers. It's not even like that. It's just like
very promotional,
exactly.
And I
was saying it sounds like our president talking about anything.
Say that, yeah, it's very vague that way, but it like technically not lying in a lot of things.
No,
it's like
very promotional. I was like, holy smokes!
It would be like if you owned a minor league baseball team and you were like, comparable in many ways to the New York Yankees.
Yeah, no, totally. Yeah. Like, wait, really? Is it though? Yeah.
And you include it just as a bullet point or whatever.
Yeah.
Things like that. So when you meet people or you dig up all this information about them, find news reports, whatever, do they sound like people that would be most of the people you come across in life and stuff, or do they sound like, if you want to say our president, if that's what you want, a salesman? Do they want a showman and a salesman and those sorts of things? Is that what they sound like? And if that's what they sound like, then you got to be a bit more careful. But do they sound like someone who's not selling you anything and who's not, that's not their training and stuff? Yeah.
Well, it's really like, Buffett and Munger always talk about, they're just trying to get the facts, even when they read annual reports, right? They, they're trying to get the facts, the figures. And in this certain presentation that we're talking about, yes, there was facts and figures in there, but there was also a lot of color about other stuff.
Sure.
I was like, holy cow, I can't believe they're
and a lot of
this in there.
Yeah, like I warned about other times, the comparing, that's very popular to compare, because
the Netflix meets Best Buy meets Apple.
Yeah, those tautologies that way. Yeah, they're common because it's kind of true. Yes, you are like it in some ways, just like the example I said. Yeah, minor league baseball team is comparable in many ways to the New York Yankees, just not in any of the ways that creates value to make a lot of money for shareholders. So, yeah.
So, but with the Nevada situation, right, that's not like a hard stop. That's just something that should stick out to you. And then it's just finding out more. That's like a good point to start, to be like, okay, well, like in our situation, everything they're doing today is different than how the company came public, if you will, right?
Yeah,
in this example that we're talking about. So it's not even relevant to what they were doing, 15 years ago.
Right, but that's why you have to kind of break the rule, because you wouldn't know that unless you investigate it. Whereas I'm saying to people as a warning, I often say to them, when they bring me things, unfortunately, people do bring me a lot of things that could be frauds. And I do say, like, be careful. And, to some extent, you can cross these things off. You will limit your opportunities, but it does mean that you will eliminate the possibility. Usually, it's not always possible to tell the difference between like something on the gray line of whether it is or isn't doing things wrong or not. But it is very easy, I think, to find things where it's just not a fraud at all. There's no chance. You know what I mean? Like, identifying frauds aren't that easy, I would say. But seeing tons of things which just aren't doing anything promotional, like that is what I mean. They don't even care to try to do those things. You can tell just by reading the presentations.
Yeah.
So another one I mentioned before is I complained about people buying things in bankruptcy stuff. I spent hours and hours, over days, but like hours and hours and hours, I don't know how many, investigating a situation that was in bankruptcy.
Recently?
In the last year. Yeah.
Okay.
Yeah. And like talk to people about it and all sorts of things. And I came to the conclusion that some information I had read elsewhere from a secondary source was wrong, and relying on primary sources about the legal case and what had happened, I realized that there was no way the common stockholders would get money.
So what's that secondary source?
Well, I'm not going to criticize
I know, but what are you talking about? Is it like another company? Is that a person? What are you talking about? What is that?
Someone reporting about the company. Okay. So like a media reports, basically. Okay. Yeah. That it was incorrect. So financial media reports are incorrect.
What has since happened?
Well, that's a good question. We could. Do I want to name it and stuff? I don't know if I want. No, I don't. I don't want to draw attention to I don't want to draw attention to a stock that is worthless. I just don't want to do that. What if someone buys it even after we tell them not to buy it?
Then we said don't buy it.
I don't want to put that speculation.
You're letting down a lot of people right now.
Okay. Anyway. Yeah.
Okay.
I've mentioned it before. It's a lawsuit involving Boeing. If you can find the party that was suing Boeing for a large amount, that's in bankruptcy, that's the company.
Okay.
So, but I didn't want to talk about it. But what had happened was something else bought them, and my understanding is that because of that, the common shareholders won't get anything. Now, I also think that they didn't win the court case in the way, or they did. I'm sure that their lawyer said they won the court case. I don't know how lawyers decide this, but they didn't get awarded the kind of money that would be needed to do a lot of good. However, that really doesn't matter because by the probabilities, you could have bought the stock. So let's say that this media report that I read was true, right? If true, you could have bought the stock, and if there was like a 1% chance that they would win this case or something, it would be worth it. I mean, something insane like that, because it was trading at a fraction at hundreds of thousands of dollars or something, let's say, or tens of thousands of dollars. I think it was hundreds of thousands at the time, the entire market cap of the company, right? Hundreds of thousands of dollars. And yet the award would certainly have been in the hundreds of millions or something like that, you know? It certainly would have been more than tens of millions. So because of that, you have this huge opportunity, right? If the case was in question. And reading the case, it was definitely in question. I don't want to criticize any company specifically, but Boeing did some very, very bad things. And weirdly, I had experience with another court case that involved the same stuff. They destroyed evidence. They ordered people to destroy evidence, basically, yeah.
Wow.
I mean, they dispute that or whatever, but that's clearly what happened. And I had another company. I almost invested in another company that did the same thing. They ordered people to destroy evidence.
It's like from Succession when you haven't watched Succession. That's a show that you would like.
Okay.
That is a show that you would like. But when they, who is it? They order Greg, my favorite character, to destroy evidence for the company. Yeah, that's funny. Anyways.
Well, this one, and in both cases, I think what they claim, of course, is they got a list of evidence of what they were supposed to preserve, and somehow a mistake was made in the communication from one person to another.
Oh, sure.
And they started destroying the evidence they're supposed to preserve. Yeah. So
it's weird when that happens, isn't it? On that really important document.
Yeah, but I want to be careful on that because there's actual specific people at Boeing who might have like risks to them personally and stuff from that in terms of who, you know, they're named in the court case and stuff about who told who to do what and all that stuff, and I'm not sure that they're all protected from legal risks to them still. So I think it's still an ongoing thing for all of them.
What are some other situations where you've broken your rules?
Okay, so
and it's worked out.
Oh, and it's worked out.
Yeah.
Okay. Well, I don't know that it's worked out in the Nevada case and stuff. I don't know that it's worked out. I mean,
have you ever invested in a Nevada corporation in the past?
Well,
and do you want to explain to people maybe that are just learning about Nevada corporations why that's a warning sign?
So companies can generally pick...
It's not even a warning sign. It's just something to look out for, right? That's it. Do more research on it.
Sure. So it's the same as the China thing. So why is a Chinese company listing in the U.S. and stuff? I mean, there are some giant Chinese companies that do it. There might be a logic to it, but why are you doing it? It's easier to do things there. It's easier to fool people and stuff that way. So the Nevada thing is basically just that a company can basically pick three places they want to be incorporated. That would make sense. They could either incorporate in their home state, which would be logical and usually where companies do it the first time, unless they have lawyers who tell them you're going to be a big company one day, don't do that and stuff. Or they can incorporate in Delaware, which gives them certain things that might help them and could be a benefit to them versus U.S. shareholders a little bit. But for the most part is mainly about speeding up some handling of business cases and stuff. There's a bunch of stuff that would be more predictable if it happens in Delaware than other places. And then the other place they could do it is Nevada. Those are kind of the three that they pick. And Nevada, I would say, offers the best protection against them committing fraud as compared to Delaware.
It almost
or many other
insulates
states.
the executives.
Right. And for not personally being held responsible for actions that I would say they took, but they would say the company took. So the protection that's offered as a shield, the corporation. It's as if the corporation did these acts and not them personally. Yeah. Yeah.
What are some other times though? Like, let's talk about valuation. Do you have any hard set rules on valuation?
Right. So that's a good one. We own one stock that violates rules about valuation.
Okay. I know.
Accounts we manage own one stock.
Over the counter markets. We actually did a recent podcast on that.
Yeah.
And talked about that because generally speaking, you don't want to pay more than what 15 times you think their earnings power is, correct?
Yeah.
And in that, I think the stock is trading for like 25 times earnings.
It's been at 20 to 25 times now. And I guess you should use EV to free cash flow really and all that stuff. But
go watch the video on YouTube if you haven't. We went through it with QuickFS. And actually the comment was that was one intense session of knowledge. A lot of people seem to like that one of breaking down where the return can come from.
Okay, good. Yeah. So, I mean, I'm hopeful about it. I think, here's the thing. On the math that I do, it works out. And Buffett said that before, that the ones that are the ones that almost the numbers tell you not to do it are the best.
Because you like the business so much, yeah.
Yeah, and I can prove to myself by writing down on a piece of paper what I expect the business to return and those sorts of things. So let's say, for instance, it was a 4% free cash flow yield, okay? Well, if I think the company can grow 6% a year or something, then even if the multiple stays the same, it can return 10%. And how much has it grown recently and stuff,
Because the majority of it's the free cash flow conversion.
Yeah, do they show what the EV to free cash flow is right now?
20 times.
20 times, so 5%. So let's say hypothetically, and I'm not saying this is what it is, but say hypothetically I thought it would grow 7% a year, okay? Because of the way the company works, look at the returns on invested capital. It has infinite returns on invested capital. So theoretically, it will grow, that would have a return of like 12% a year. Okay, even though it's trading at without any multiple expansion. And then also the company actually buys back some stock. And so if I thought it was a little bit cheap, let's say hypothetically I thought it would grow 7% a year. I thought the market would return 8% a year, let's say total return. I think this will have a 12% total return if the multiple doesn't expand or contract. They're buying back their own stock, so that's getting a 12% return on top of that into it instead of paying me a dividend. So it's actually even more valuable than if they paid it all out in dividends, blah, blah, blah. It's just, you can see that. But I have to be right. And that's the issue. The issue is not so much that it never makes sense to pay 20 or 25 times earnings. It does if you're not wrong.
On the business.
On the business. But if I'm wrong on this business and competition comes in or whatever happens and it falls apart, it deteriorates, Or what if it starts needing to have capital or whatever, If I'm wrong on that, if the margins contract, if it can't price if it can't retain its customers, if it can't keep its prices as high or higher, and if it has to put capital in the business, if any of those things are true, then I'll lose money on this one. But for whatever reasons, I believe that I think that I know the business well enough to know they won't have to add capital to the business, that they won't lose customers over time, and that they can keep prices the same or raise them over time.
Yeah, they reported earnings and they bought back a lot of stock last quarter, and they were pretty insulated from COVID, which was interesting. Yeah.
I'd rather it was cheaper. Maybe we'd have bought more if it was cheaper and stuff, but I have to make do with the choices that I have. So I did buy this preferring it over some things that have P's of 10 or something. So it shows you how much I like the business.
So you broke your rule.
I did.
Broke some rules. What are some other rules? What about when it comes to management? Are any rules with that, or is that pretty much a hard stop?
If I don't like management.
I mean, yeah.
I've investigated some very deeply.
So let's say you don't like management, but there's activists involved, or somewhere maybe you could have a controlled position in it.
Sure, I've investigated some like that. Yeah, there are some where I am ambivalent about management and bought into them, and I always regretted it.
Really?
So far. Yeah. I think, yeah. No, I mean, there might be some very cheap stocks or something where that's true, but there's a couple ones, and we sort of hinted at them before, where I don't like management that much or whatever. Or I don't know if I don't like management. I didn't feel management was communicating. I don't know. I felt management maybe wasn't that realistic. I don't mean that they were terrible people or something, but they had ideas that I didn't think were that realistic. I think it's important to have very good idea of what's actually reported, like seeing the world as it is, not as you want to see it.
There you go. That's one of my best advice. I asked Samir Patel Ascalon Capital when he came on the podcast. I said, what's the best advice anyone's ever given me, or something like that. And he thought about it. And he said, really thinking long and hard if you're seeing the world for the way that it is or the way that you want to see it.
I like that.
I really like that too. I'm
amazed that you like that.
I've taken it. I've taken it as myself. That's okay. Right. Why are you amazed that I like that? What does that mean?
This is a podcast that you start all the time by saying it's the number one value investing podcast in the world.
That's the truth.
Okay. All right.
No dispute there.
By quality, not by...
by everything.
Okay.
By everything. But so management.
Right. Yeah. Yes. And it's always... at the time I buy and stuff, I know... it's the marginal stock. You know what I mean? Like it's in the portfolio. I've never thought, there hasn't been one where I thought this is the best stock in the portfolio, and it turns out not to be. If we have 6 or 7 stocks, it's always, I would rank it 6th or 7th of how sure I was of it.
Here's an interesting one. What about the shareholder base? How often, because whenever we talk to management, we always ask them, what their shareholders think, or what do they think about running a public company, kind of like from that perspective. I mean, what are your thoughts ever on, like, do you ever think about the shareholder base in certain companies? Who owns it? Yeah.
I'm thinking, I've also broken my rule a couple times about share turnover, and it hasn't worked that well so far either in that. So apparently that's a combination thing of a too active shareholder base with management I don't like as much. Yeah, I do think about the shareholder base sometimes, sure.
Do you ever feel more safe in a stock if there's another large investor in it?
I would only if I didn't like management. Yeah, if I didn't like management, then the number of votes that parties that could do something about it had, would be helpful.
What do you think is the number one rule, like the biggest rule that you've broken, where it worked out for you?
I guess, well, I don't know. I have suggested to people, okay, so on this podcast, at times I've kind of suggested you don't really need to buy a stock that's lost money. I've even gone as far as saying, like, you can just limit yourself to stocks that made money for 10 straight years. I've had great success with companies that have made money for decades and decades and decades, and then they have a year that they lose money, and I think they'll go right back to making money. If you buy them at that moment, then it's great success. And I've had that like twice, where a stock had made money, a company had made money consistently, was profitable every single year for 30 years at least, and then big loss, and I bought it on the big loss.
Now, what was the big loss?
I thought in both cases it was unrelated. It was one screw up,
Got it.
One thing that they bet big on one thing and it didn't work out. So one case they bet big on something that wasn't core to the business. On the other one, it was a product launch, bet the company on the product kind of thing. You only launch one of these products every 4 or 5 years or whatever, and people didn't buy it. But the next time they had another product that launched a few years later and stuff, then people bought that one. So they messed up that one time.
Interesting. I'm just kind of curious. Because sometimes it's like you break the rules and it works out, right? And that could be dangerous.
Right, because then you learn to break the rules.
Exactly.
Yeah, I think that's very true. The one that would be most risky for a lot of people, probably myself included, but I was always careful about it, I guess, is with debt. Okay, because if you happen to buy something that's heavily leveraged and you're right about it and it works out, you'll make this really great return. But you are going to lose everything one time when you do this, if you do that, So those value stocks that are very, that are under a mountain of debt, and so you're betting on the sliver of equity being worth something, whereas there's a,
like
good
the
chance
graph techs of the world.
Sure. Things like that,
more cyclical things like that. Those are sort of the horror stories you hear in the value world. Is companies like that actually like go into bankruptcy. Something doesn't work out and they're smoked.
Yeah,
I don't even know if Graph Tech. I can't remember if they had debt or not. I don't think so.
They had some. Yeah, they had some debt.
They did.
Actually,
okay.
But and then I guess my biggest rule always is the one about avoiding things that have the competition things, and we talk about that a lot, and that's sometimes hard to judge, But we have talked about that. Like we were talking about an industry where the stock will grow faster. Almost certainly, the company will grow faster than most of the companies we own and everything. And while you think that is a great thing, I'm always saying I'm worried about it because everyone's excited about the industry. And, that actually worries me. There's all these new entrants. There's always, venture capital things want to be in it. People want to acquire. Like, that's one of the things.
Because people could operate as a freemium in the industry.
Right.
And you have said that when you've come across, that's almost been a rule for you.
Yes.
Right? There's been times where you've seen, like, the situation doesn't end. Great is when, okay, so you have an industry everyone's excited about, it's venture capital back, and then companies come in and offer a freemium model of some sort, and that's their competition to a premium model.
Yep. And if companies are being funded without needing to earn money, that always worries me a lot. And the thing is, investors get excited about it because they figure you'll get bought, your company you're investing will get bought out at some point. One of the big companies will buy you because everyone wants to be part of this industry. And that is one that I've definitely thought about and have been on the fence about before, because on the one hand, if I think it's a really good business now and has growth, that's great, but maybe the business is changing a lot. I mean, an industry won't look like it's changing much, but if you have a bunch of new entrants come in, it will. That'll suddenly change it. So if people are willing to write blank checks for you to open up some kinds of companies, then there'll be experimentation and customers might like that better.
Is it kind of weird though? Like, for example, we always talk about competition, right? And you like banks, and in theory, there's an unlimited amount of competition.
Correct.
There's an unlimited amount of banks.
Absolutely, but
not all banks are ran the same, right?
No, yes.
Deposits are different.
So what I care about, here's the thing. I think I define competition differently. Like, a peer is not a competitor. A competitor is someone who can take business from you. Okay. So, like, how much competition is there in elevators? How much competition is there in ad agencies and stuff? I don't know. How much competition? I mean, if we go in and we talk to banks, or let's say we were talking to, they're not publicly traded, but let's say we're talking to law firms and and accounting firms and things like that. How much would they really talk to us about their competitors, their peers, right? And in fact, if they did, they talk as much about their employees being poached as anything else. They would not generally say that if they do a great job with their clients, that they're really worried that they're going to lose them to competitors. But if we go into a retail type situation, they are much more worried about that and stuff.
Yeah, like Android comes out with something new and their customers want it.
Yeah. So it's related heavily to customer retention. How easily can you retain your customer? And there's plenty of ones that we talk to that in theory have a lot of competition, right? But they will say, look, if the place across the street charges 20 basis points less than we do for some service, okay, and we lose a client to that, then there's something wrong with what we're doing. And that shouldn't be the kind of business we should have brought in the first place and stuff, And so, but absolutely, I agree with that. If someone was trying to say to me, buy into a business because they have the lowest possible rates on something. I mean, one thing, I get lots of questions about brokerage, online brokers and stuff. And when you get down to the point where you're not charging for trades anymore, that's a level of competition that worries, that is a level of competition that can worry me. But a lot of people won't switch brokers.
But it is easy. It's an ACAT. It's like 5 days, not even, and then you're there, right? But it's like the example we were talking about Richard Branson's life. And we were talking about, you were telling me about one of his books that you like and how, they started like Virgin Cola or their own version of it.
Right. And he was talking about that,
how Buffett has talked about Coca-Cola is so great because you could give somebody else, what do you say, $100 billion or whatever, and they wouldn't be able to, outcompete Coca-Cola.
Yeah.
Or at least start their, a similar business. And you were telling me how Richard Branson, they had their own soda, and even by blind taste test, people actually liked his version more.
Right.
But when it came to actually selecting it, the Coca-Cola brand held up.
That's the thing about the competition. So I think that's a really great one. And what he said about it basically is, that he realized the mistake was that he thought that by being if they won their taste test by a little bit versus Coke, So what he said basically was they liked ours better in the taste test, but you know what? Coke scored pretty well in the taste test. They liked our prices being a bit lower, but you know what? They didn't think Coke's prices were too expensive, and they really liked the Coke brand too, But they were already drinking Coke. But even if they liked our brand, even the people who liked the Virgin brand kind of liked the Coke brand, What he was saying is what he learned was you want to be in the businesses like they hate their telecom company that they have, the incumbent telecom. Airlines. They hate the airlines. They hated British Airways, those sorts of things. That's who you want to compete against. You don't want to ever compete against trying to steal a customer from someone who's like, I'm mostly satisfied satisfied. Because even those customers, even when they believe that the bank across the street might be a little bit better on a bunch of scores, they're like, I'm already at a place where I'm satisfied. I say that a lot about like banks, certainly insurers. It's true. The reason people leave them is there's a mistake made, and ad agencies is 100% true. They're dissatisfied for some reason, so they mess up something with the client, and then in that moment, someone who's been trying to woo them for a really long time, keeping in touch with them and remember we're here and stuff, when you're not satisfied, does win the business at that point. Mm-hmm. But it's not the case that someone who's otherwise satisfied is like, that place is charging me a little bit less, right? But that's an ongoing sort of thing. So I do like those kinds of things. And so it doesn't bother me, if you have a high retention rate. I'm worried about competition for each specific customer that way. And so if there's a business that has very high retention rates, even though it's very fragmented industry, I'm okay with that. But if there's an industry where they're like everyone switches, well, the example I give about that is like gyms and weight loss programs and things. But gyms, not only are there a lot of them, but there's very few people who stayed loyal to one gym and only one gym for a long time. And that's really scary when you talk to people, like if you ask them about gym. So if you ask someone about, well, tell me about which bank, why you like this bank and why you don't like another one, or why you like this website host and why you don't like another one. Everyone just tells us about that one because they've been using it for 20 years. Yeah. Mm-hmm. But if we said gyms, they'd be like, oh, well, I've used 4 or 5. I can tell you about all the different ones. That's a really bad sign.
Sure.
That they've sampled a bunch of different things.
Even I'm in that boat. I can name like 5 different gyms.
So that's a business with too much competition if that's true. Instead of one where you say, oh, I've only used that one, Mm-hmm. Yeah.
Cool. Well, I want to thank everybody so much for tuning in with Geoff and I on the Focus Compounding Podcast. Make sure you hit the subscribe button both on YouTube and the podcast side of things. A rating and review goes a very long way. If you like everything that we are doing here and you like our backlog, make sure you download all of the podcasts because on July 1st, only 20 of the most recent podcasts will be available. The rest will be about $8 behind a paywall. And we're going to think of other content as well to make it more worthwhile for people that do become premium to the podcast. I want to thank everybody so much for tuning in, and we will see you in the next podcast.